Hello, it's Cryptos. I hope you are well on this Friday, 12 January 2024. We meet today to talk BTC, to talk crypto, to talk ETF. Obviously, we will have to talk about ETFs and answer the question whether or not ETFs are a success for crypto. Have we really seen an increase in volumes? What was the impact on the market? We will start with this news, which is clearly the biggest. Yes, all the ETFs were listed directly yesterday. So, as expected, at the end of the week, we started to be able to see trades that were made. We are talking about 16 billion volumes transferred. Be careful. It's not inflows. It's different. It's the volume of exchanges, so purchases, sales accumulated in the first minutes of the launch. We will see on the graph, you will see it is quite impressive, particularly on that of high share. We really see the very strong upward acceleration, then the reduction. So that means that we have indeed taken profits. We do have trading volume which is not inflow volume. And we see that the day ended with 4-5 billion trading volume across all ETFs. So we can think that it's a lot. That's why I preferred to put you here, for example, coin market cap, which gives you the total volume over the last 24 hours, which were traded on BTC only. We are talking about 40 billion, Ethereum 17 billion, Tether 60 billion. We see that it still remains relatively low, but even if it remains relatively low, it is also approximately 10-11 of the total volume on BTC. So it remains relatively important in terms of volume, especially on a launch. Again, there are two things to see about the launch. Either we have a start of acceleration, which is strong in terms of volume, which is generally the case because it is the announcement and launch effect. Then it settles down to increase little by little, which it's called a U-shaped curve. I'll show you that on the graphs later. But it still remains significant. The question is whether it will really impact the market or not. I want to tell you that almost everything is done OTC. There we have the OTC volumes from Coinbase, OTC being over-the-counter, implying that it is not bought and sold on the market. It is directly in a deal with Coinbase. We see that we have $7 billion transferred yesterday, mainly in OTC deals on Coinbase. So it's just impressive when we look at the usual movements, we are still well above what was usually done. So it clearly shows that we are going through OTC and that it is not managed by the market. The ETFs go through OTCs to be able to validate their volume, which at the same time is consistent. Next to us we have Vanguard, which shuns the BTC ETFs, which explains to its clients that they do not want them to be exposed to these assets because they are too risky to see what will happen next. I think it's just a form of temporary sulking before there is a deal that is put in place between the different big guys and Vanguard. Rather classic. Besides, Robinhood, as I told you yesterday, didn't waste time and listed the 11 ETFs. So that means that now everyone can gain exposure to ETFs. Everyone who goes through Robinhood. So there are still a lot of users in the US who use Robinhood to be able to gain exposure to different stocks and different ETFs. Now BTC ETFs are integrated directly into Robinhood. On the other hand, what is interesting is that we still have ARK Invest, which continues to sell its Coinbase positions and its Robinhood positions. We're talking about 4 million. It's not huge. 4 millions too, but it's just the continuity of the exhibitions he is currently doing that always raise questions for me. That's why I always give you these figures, because it's interesting to follow them. Speaking of numbers, we have the Macroeconomics that came out this week, in which we had here CPI 3.4 instead of 3.2, that implies that we have an increase in inflation. And when we look a little bit where it is located, we see that it is located in the major categories like food and all the items. So that means that it is rather the service and food part in which we have an increase. Because at the level of energy we always have a reduction, we are on an energy which is relatively low, a cost of the barrel which is relatively low compared to what we were able to experience last year. So we is here still on this notion of inflation which is having difficulty coming down, and there we will ask ourselves questions, and the market will normally start to ask questions about the possibility of really having the Fed rate cut in March, namely that it is rather pricey to. This way at 70, consider that in March we will start to lower rates, see if it will really be done. In any case, when we see inflation as it is, we should start to have a pricing. What surprises me is that we have quite little pricing. Okay, we can clearly see that the wick, yes, we had a little bit of volatility, but it's rather stable. It's the same on the Nasdaq. We sees clearly that even it ended in positive, and we see especially at the level of the VIX, which are the options, of volatility on the S&P 500. What does that mean? This means that these are hedging options if we ever have movements that are too strong and particularly downward at the level of the S&P 500. And we see that the VIX is very low once again. So it is not no one is covered because no one thinks it will go down. I think it will take a little time, and in particular the effect of the announcement in March risks being very damaging if there is no drop in rates, and if there is ever. Market has not actually integrated this probability. Next to it we have BTC, because BTC has been talked about a lot, in which there was a huge fuss with the opening of trading on ETFs. This wick went to hit 49,500 on the CME, a little less on the total spot. But what is interesting is that we mainly looked for the liquidity which was above the Terra Luna shock. We went to type here the order that we had noted. So the order block is good present, and we are well at the level of the classic 618 retracement, a Fibonacci on this very present bearish movement. So that means that for the moment we are rather coherent. The other extension that we had in mind, and that we still have in mind, is to chase the liquidity here from these two wicks there, which are at equal high, which are positioned at the Fibonacci extension of the bullish impulse that was given. First impulse and retracement before having the break, which is 168 to 51,500. A little bit more above, we will say 52,000 to be a little bit broader, to really get the liquidity here. This is a bit like the second target that we have in mind, if we continue this upward acceleration. Because if we zoom in a little bit, we see that we have indeed had the opening of the American market. Here, boom talk opening of the American market, we have indeed the acceleration, the increase in volumes. We have well spoken about 15 billion in the first minutes, in fact, of the opening of the American market and the accessibility of this ETF. We can clearly see that we had a very strong inflow and a very strong outflow. Strong, okay? So above that, we had the purchase sale. And that's even more visible when we look here. So that's IBIT. So I, which represents, if we type it here, you'll see iShare Bit Contrast, which is that of BlackRock, in which we can clearly see that we had a huge bit here to get a very high level, which was swallowed right away, okay? So there, for those who were there at the time, we had a huge green candle, and this green candle transformed into red candle almost instantly, with bearish work behind it. We will wait for classes to reopen, but what we could expect in this type of launch is what we call a U-shaped curve, something like that, before having a new acceleration. So we have the announcement effect. We have a work of the price which can be bullish or bearish. It doesn't matter very much. And then we have a re-acceleration once the price is mature, and in which the announcement effect happened. It's rather a classic thing. We know a lot in particular about all the launch effects. I invite you to look at all the codes which were launched during the year 2022, 2023. You will really see this curve U-shaped, very classic. We will see if yes or no, and yes, or how long are we going to stay in this lateralization phase? Are we going to be in a U-shaped curve? Or are we going to be in a U-shaped curve, which will be structured more like this, with a retest, second hop, re-acceleration with a second retest, and so on. It's going to be very interesting because overall it's going to be what's going to be determining whether or not we're going to have an ETF, which will allow us to have very strong inflow at the market level, or whether it's going to be an ETF, which is going to be pretty classic. These will be metrics that we will also have to monitor throughout the year 2024, the liquidity injection metrics in the different ETFs, in which we will have two elements. One, the possibility of seeing inflows institutional, and secondly, we could see what happens through Robinhood. So what would be the share of retail in ETFs, which would also be very interesting. So that I am thinking of indicators that you will see appear shortly on the channel. I am in the process to think about how to retrieve this information. Besides, we still have the dominance which is sinking. Dominance which for me should arrive around the 51.9, we will say below, to go below the 52. We must have a rebound here. If we have no rebound, as I told you, we are sinking. And if we are sinking, that means that we have the liquidated people who are in the process of leaving elsewhere, who are in the process of leaving on altcoins. Yes, we have a few altcoins that are growing, but overall it's relatively weak. We see that it's relatively flat. If we look closely here at the level of the game, we definitely have an upward acceleration. And there we have a form of lateralization, or even a form of deceleration. So here we are still in something that is rather structural. We had an acceleration in BTC. We are transferring liquidity to altcoins. Altcoins have grown. There we are going to see where the liquidity is. I think that next week we should start to get a lot of news on that front. We still have a small ETH which continues to perform, but we still do not break the important levels. So for me, we remain on standby. ETH still remains a very big asset. For me, it is one of the elements which are also strong if this is not stronger than BTC, depending on which point of view we are from, but we still have an underperformance. I am really waiting for the explosion, and for me, the explosion will come when we have a rupture here of this accumulation, and therefore we will break the zeros. To really have a bullish acceleration. And then we will say to ourselves that we really have Ethereum outperformance compared to BTC. This is not the case, but which is at the same time logical, because it is the moment to the BTC ETF. We are going to have the halving, which is going to happen. And clearly everyone is going to look at the halving, and which is at the same time normal, because the halving is something which is structural, which is going to divide by 2 the income of miners, and which is not a key moment, but which is the start of a key moment, which is the bullish acceleration of the bull run. Generally, it starts crescendoing to re-accelerate between 3 and 6 months after the halving. That's why I have always shown you on my different charts, my different dates for the bull run, which are rather late 2024. In any case, we have time. It's only January. It's only January 12, 2024. We've only just finished the opening of the ETFs. We have had 15 days of trading. We will wait for the weekly close, which will be interesting, which will be a 2-day close on the ETFs, but which will actually give us quite a few indications, and it will be especially in the long term that we will be able to see this. In any case, what is interesting to see is that we had a big liquidation, even more than 200 million, I think, so I don't have all the liquidations here, but more than 200 million which were liquidated on the market with this volatility, which is rather classic. That's why I said to be very careful about the positions you have. And what's interesting is that we have, all in all, quite a few short positions which are very exposed here, okay? We have very few levers that are positioned quite a bit long, okay? We are in the process of pushing the price, in fact, upwards, and quite few shorts positioned, and this is also valid on Kingfisher. We can clearly see this very significant mass of longs which is below the price here, of price, and there. We can clearly see the part of the number of shorts which are relatively low. This is seen even more when we look at this style where we want to know that we have a tide of longs which are positioned, and this tide of longs, if we zoom out a little, are mainly positioned above the 40, and below the 40, it's a little more disparate. But above the 40, we really have a lot of longs positioned with here still an aggressiveness of the CVD spot, and we is decreasing the CVD perp. So that means that here we are much less aggressive on the perpetual and the futures, so we play less with the levers. In any case, we are less aggressive on the levers, and we are much more aggressive on the spot, which is rather positive, okay? This implies that we have a market which is much more oriented towards the pure market and not here the perpetual. Therefore, we have less leverage. This also means less volatility due to squeezes, whether short or long squeeze, but this also means that bullish momentum can no longer be fueled as we had until now by short squeeze. This is no longer the case, so we are taking a step back from this market, and I think that there we will recover in the month of January. We will have the directive, which will be given on 2024, and the market typology, and we will see if the ETF will really change the market typology. That would be interesting to see. Are we going to pass into a phase of prematurity, which would be ideal for the next cycle, the next bull run of 2024? Speaking of 2024, if you are not prepared, don't forget that you have my guide and description and commentary, which is free. 30 concise pages to explain to you how to buy, how to sell, when to sell, how to manage the psychological part, how to manage a bull run. Everything is available in comments and descriptions. It's free and we're done for this day. We'll meet again later at 13:30 for a video on SUI, a video that you voted for. And if you like this content, don't forget to leave me a like and a comment. It always makes me very happy and it supports the channel. And I wish you a very good day.